All right, let's talk about our presidential candidates, President Trump and former Vice President Joe Biden, who's running for Senate or president, depending on the day. I couldn't resist that, guys. Come on. You guys have to admit that that's pretty dang funny when you keep saying. All right. Um, and there are some pretty big differences from a tax perspective. In fact, this is what somebody called me a nerd. That's just not nice. Well, actually, depends on what genre you're from. In my world, that's like, yeah, we are listening to many things. All right, so let's jump into this. Individual rates. This is what's interesting. Trump did say he wanted to lower middle rates. So I'll show you guys kind of a chart. So he wants to lower middle rates, probably to help the lower middle rates. And then Biden wants to increase the top bracket to 39.6. He hasn't talked about the other brackets. He's kind of said leave it all the same, which was what it was under the Tax Cut and Jobs Act. But the question is whether that's going to. Some of you guys have some pretty good questions. It's like watching paint dry. That's just not nice. Corporate rates. Trump is 21%. Biden wants to move that up to 28%. And I'll go over what the impact will be when we get into this. Dividends right now, qualified dividends are 0, 15, or 20%. If you understand net investment income tax, you could add 3.8 to this one. And so technically, the top capital gains rate really is, when you look at it, 23.8%. And what would happen here is under Biden, you'd still have that 23.8, but you'd also have what it ends up being what would that be? 39.6 plus 3.8. What would that be? 6, 8, 4, something. See if I can do the math in my head. 39.6 plus 3.8. So you go 4, carry the 1, 13. Yay. So 43.4%. That would be your highest bracket. Anybody wants to play math with me, you guys can do that. So it's pretty heinous. And that's if you're over $1 million mark. Biden also wants to increase the child credits. He's talked about giving families some more money. Payroll taxes. Biden wants to. There's something called old age disability and survivors insurance, the Social Security side. He wants to add that back in at when you're over 400,000, and I'll show you guys a chart at 12.4%. So he wants to have a phase out, and the phase out's at 137,700, and then have it come back. And Trump wants to forgive OADSI for sure this year for what he kind of did in his executive order. He wants to say basically, hey, we were deferring and allowing you to pay your taxes, your employment taxes in 2021 and 2022 that you incurred in 2020. And we want to forgive those, is what he said. So there is something there. Estate taxes, he wants to keep and make permanent the Tax Cut and Jobs Act, which means $11 million plus of estate tax exclusion per person. And Biden wants to allow it to expire and go back down to around the 5 million mark, but he also wants to get rid of the step up in basis. He wants tax on death of appreciated assets. What does that mean? It means, let's say that you had stock. Oh, you can't even read my writing, can you? Expire, and I'm just going to say no step up. Ordinarily, when you die, your capital assets, the basis adjusts to the value on the date of passing. And if Biden's plan comes in place, he wants to eliminate that and make it taxable as though you sold it on the date that you passed. So his whole deal is like, hey, you would end up with lots more taxes coming in when people passed away because they would have capital gains almost immediately on capital assets. Itemized deductions, some of you guys know that Trump got rid of them, so they're gone. You have your standard deduction. Miscellaneous itemized deductions are gone, so I should say miscellaneous to be fair. The P's limitation went away. Biden wants to bring a version of that back in, so I'd say P's plus, which just means that you're going to have 3% of a limitation over a certain dollar amount. And I think they're talking $400,000. There's also a phase out of 199A is gone. You would get that after 400,000, which it already goes away for professionals, but for all businesses it would go away. And then what was another big one I was trying to think of? I think that's the big one. And then itemized deductions for Trump. You have SALT, so that's right. So Biden would get rid of SALT, so no SALT, which is the state and local tax limitation. Right now there's a $10,000 limitation, so under Biden that would go away. What Biden's really doing is saying, hey, for anybody under 400,000, we're gonna let you have more deductions. And somebody asked, why is 400,000 the magic number? They just think that means you're rich if you're making more than 400,000. So I think they just picked it out of the air, saying that we can demonize those that are making more than 400,000. I shouldn't say that. That sounds political. That they're going to tax at a higher rate the people that are making more because they believe that they're able to pay more. So this is the Social Security tax. This is the OADSI. This is the OADSI. This is 12.4%. And the employer pays half, 50-50. The employee pays half unless you're self-employed. It phases out right now, just that old age, death, and survivors insurance. The Medicare goes on forever. The Medicare, the 2.9 Medicare, does not have a phase out. That's just going on. But what happens is it used to be you'd go down to zero after you hit this phase out number. And all Biden's plan is going to do is say, hey, anything above 400,000, it comes back. When you're looking at tax bracket, let's just be real and look at this. This is what would happen in 2021, assuming that Biden was able to change the laws, which he obviously can't. I guess he could try in an executive order, but it would be the Congress would have to obviously do that, and he just wouldn't veto it. He would welcome it. What you really have is just the 35 and 37% going bye-bye. Again, anything over 400,000, you start getting this pain. And then another magic number is $1 million, and you're going to see where that comes in when we talk about capital gains. What does it really mean? It means here's the effective tax rate when you're talking about the income that flows through. You have 199A adjusting these numbers. You have Social Security or self-employment tax adjusting these numbers. So since we're talking about an S Corp, we're just going to be talking about Social Security. But you can kind of look and see, all right, in the old days, you were pretty much done if you got to the point where you were maxing out your bracket. You had a little bit of an extra, but not much. With Biden, you're looking at about a 3.7% increase. And then where it really hurts is if you're making over in the 600,000 range, over $500,000 really. And then you're talking about an 11.6% increase in tax. So again, let's just be real. Capital gains and dividend rates, and I kind of wish that they would just do this for us. Here's how much it'll go up. All right, it'll be up 2%. Most people probably wouldn't care too much. But when you start seeing 10% increases in an already tough year, you're like, hey, thanks. Maybe my business is just now reopening, and and I have deferred business, and everybody helps me, and I have a great beginning, of 2021, and I know I'm going to get slammed for it, And then here's the dividends. When you're over that $1 million mark, this is where it gets crazy. you literally go from that 20 to that 39.6. Now, why is this important? Because your dividends is what you get out of the corporation. And so we would have what we wanted to be is more competitive worldwide, and we wanted people to start doing business here. So you kind of see what Trump's plan did is, hey, really, he kind of capped it. He said, hey, if your company pays tax and you pay it out as a dividend, then you're looking at it going, hey, it's not, you're not getting murdered on it. Before it was 50%, and that was too bad. Well, now we're going to go to 59%, which is what do you think is? What do you think is going to happen? And now remember, everybody who gets into this stuff, sometimes we get people that get a little edgy. Corporations don't really pay tax, because if they didn't pay it, they would pay out more. And how do we know that? Because personal incomes have gone up steadily over the last few years, and people are paying more in taxes than they were prior to the Tax Cut and Jobs Act. So anyway, I'm not going to argue with anybody. So Trump tax versus Biden, what you may want to be looking at. Here's the things that I'm looking at, and I'm telling our clients. Some of you guys may be on the quarterly call coming up here in the next short period of time. I think it's next week, actually. But we may be looking at gain harvesting, because remember, if you make $1 million plus, you're essentially going to be paying 100% more in tax. So you may be looking at the end of the year going, heck no, I'm going to sell off everything that has lots of gain in it. You may also want to do a Roth conversion. And the rule there is, if your bracket is going up, if your tax bracket goes up from where you are right now, then a Roth is usually a good idea. If your tax bracket's going to stay the same, then it's equal. If your tax bracket is going to go down when you retire, then you're better off doing a deferred plan, like a regular 401k or a defined benefit or a traditional IRA. You also have the ability to do 100% charitable deduction this year in 2020. And the reason I say that is because depending on what your income is, you may not get much of a benefit. So for example, let's say you make $1 million under the Biden plan in 2021. They would remove $400,000 from that. That's their magic number. And you would have $600,000 times 3%, which equals $18,000. And you would take whatever your deductions are minus $18,000. And that's going to be what you're left with. And so if you wait, you may lose the benefit of the deduction depending on what your income is. And I know this is getting complicated. I just happen to look at this stuff and deal with it, and I can play with the numbers. But most people, this is like it's like writing Greek, right? Just know that these are the things that we would look at, and everybody's situation is a little bit different. But it's worth taking a gander depending on what you think your income's doing. Carry forward net operating losses. You have the chance, if you have a loss in 2018, 2019, or 2020, to either carry back for 5 years and then carry forward, or not and just carry forward. Why is that important? Because if I have a net operating loss in 2020, I may choose to carry it forward if I'm going to be in a really high tax bracket. So it makes sense to me. I might wait on harvesting losses. If I have positions that have lost, I may want to wait a week. If I'm going to be selling it and I could sell it in December, I may want to sell it in if I'm going to be in that 39.6% capital gains bracket, I may just want to wait and sell my losses in 2021. And then gifting, it's the use it or lose it type thing. If the estate tax is going to go away, and you'll know that probably in November and December, depending on who gets Congress and who has the Senate, we'll have an idea of what they're going to be able to push through. And again, I'm not being political. I'm just saying that's the reality. is if Biden gets in, but he doesn't have Congress, then he's not going to be able to do much. If he does, then he's going to be able to do a lot of things, and you better be prepared. So we may want to say, hey, maybe we want to use up our gifting under the 11. I think we're at 11.8 million this year. If you're in a high, if you are a high estate, we may want to look at that.